panel of experts today and try and get some analysis into what's happening. Joining us on the show, Gaurang Shah, Assistant Vice President at Geojit BNP Paribas, and also T. Jagannathan, Equity Head at SMC Capital Limited. Jagan, thanks so much for joining us in this conversation as well. What are you making of it? We were speaking earlier to Rajesh Baheti, and then Ashu, our research team, was also pointing out that the put activity is starting to reflect that perhaps there could be follow through on today's cut, and you could see weakness build a little further on the markets. Do you think that's likely to happen, or how likely is that?
It's this correction is almost on cards, and it's just waiting to happen, and finally it has happened. So international concerns are definitely there. Even sheer on valuation basis, with a 900,000 rupees range of EPS on Sensex, the current 18,000 level of Sensex works out to about 18 to 20 times PE multiple. We cannot call it as undervalued for sure. I mean, we are somewhere close to somewhere between fairly valued to overvaluation zone. So that's why this kind of the correction is anticipated. Even earlier, only the FII flows has been keeping the market stay there. Otherwise, I think we would have been gone back way before. I think this time the market fall will be can be sharp. As they say, when the markets go up, they go up on staircase, but when they come down on escalator.
Markets go up on the stairs, come down on the escalator. Well, a lot will depend on what happens globally. Jagan, what's happening on IT? Why is there so much nervousness building up on IT right now?
You see, I mean, the point is when the momentum is going on, many of the select stocks have ran up, because the broad index has remained in a range of barely 1,000-point range of 17,000 to 18,000. But a select pockets of stocks outperformance has happened. Today, when the market is going down, it is tend to go. All the stocks who showed momentum earlier will go down, because as they say, because in India when the market is going up, almost everyone will do well. Similarly, when the market is coming down, almost everything will come down. It is almost a secular either rally or secular fall. For example, on the day nervous like this, for example, 250 points down, so I think it is almost a guaranteed that every sector will see pressure, because it's almost like a situation of cycle stand. If you push one cycle, all other cycles will fall.
All right, so there is some amount of concern there coming in on the IT stocks as well. Gentlemen, just stay with us. We're going to take a quick break, come back and talk a little bit more in terms of stock-specific point. Jagan, I mean, as soon as you see a market at 5,400, even 3-4% correction on some of these stocks which were being talked about, overvalued, a lot of people are sitting on the sidelines. Do you think money will come in, and that in itself will sort of support these markets a little bit? So the fall, while it may continue in dribs and drabs, would not perhaps be all that sudden. So just countering your theory about markets go up on a staircase but come down in an elevator, that elevator may be a slow-moving one.
That's the hope. I mean, but always always that's the hope of the market. But that doesn't happen that way. For example, it all boils down to FII flows. I mean, as long as FII flows come in, I believe the market will sustain. But because most of the concerns, whether it be about Spanish or whether it be Ireland, whether any of these downgrades can really the first party that is going to get disturbed is FIIs only. So the FIIs were the guys who are actually keeping the Indian market at these levels. So any outflows or any stopping of inflows by the FIIs can really disturb the Indian market. So the speed of the escalator at the time of fall will depend upon the FIIs, how they will take it. But currently, I think if somebody has waited up to now patiently to enter the markets, I don't think there is any rush to really enter again. I think they can still wait.
Okay, even today. On the downside, you've got one interesting move, and that's been J&K Bank. Jagan, you've looked at J&K Bank today. What did you make of this entire controversy around Hasib Drabu being asked to leave, 7% cut on the stock, reflecting that the market perhaps not liking this sudden and unexplained management change?
Yeah, I mean, this kind of management changes on a sudden notice is always a concerning point, especially in the financial services, because in the financial services, credibility is everything, and the transparency and everything. So this controversy can disturb the stock a bit. But once the clarity comes, probably this kind of disturbances and whatever the price correction that is happening may prove to be a good entry points. But it will be better to wait up till the time all the dust settles.
Thank you very much.
Jagan, final comments from you as well. You sound like you were expecting more of a cut, so I'm guessing next week you suspect will remain nervous, remain a little bit more volatile than we've seen so far?
Of course, and I think taking some money out of the table is nothing wrong right now, because weekend will be too risky, especially when Bernanke comments were also waiting. So I think better to go the next week with a relatively lighter portfolio.
Lighter portfolio. It seems like that's what's happening. Jagan, Gaurang, thanks so much for joining us today on this 2:30 Factor.